Holy moly guacamole. This market continues to be a wild bucking bronco. That's what this market is, a wild bucking bronco, just all over the place. Facebook down tremendously, its biggest, largest one-day drop. This is just Googling stock market news. You're going to be flooded with Facebook stuff. And you know what? The Qs was down like around 4%, which is its largest one-day drop since, I guess, the pandemic, right around that area. And there's a lot of fear out there, right? But there's actually a couple bullish things that took place today, and that's what we're going to talk about in today's video and look at some key levels. You're watching the Stock Market Brief Show. My name is Michael Silva. Welcome to the channel. If you're new here and you like this type of stuff, consider subscribing. If you come here often, make sure to hit that thumbs up. That is what that is. Let's get into today's show. Oh, welcome back, everybody. We're going to start off with, I'm all over the place today. I tell you, it's just a weird day, and I'm laughing. I know that there's obviously some people that maybe were trapped in some of these plays, so let's be cognizant of all of that. We need to be, once again, continued on and focus on our risk and capital preservation. That is what's going to make us survive in these markets. And we focus on growth over time, right? These right here are the 11 sectors that make up the S&P 500. You can clearly see the top 3 names are all defensive: consumer staples, healthcare, and utilities. The only one in green, consumer staples. Tell you what, this market has been like a light switch, flipping back and forth very quickly between risk on and risk off. And yes, today was a risk off type of day, but even though it was a pretty big day to the downside, it doesn't actually look all too bearish, at least in this particular point in time. And I'll explain that in today's video. First and foremost, Amazon's reporting after hours, and I don't even know what to say about this. This is just crazy. It's absolute insanity to see, stuff like Facebook and PayPal just down massively. Snapchat, right? We're Snapchat. Snapchat after hours, it was down 23% on the day. After hours, it's up 58%. This is a $39.4 billion market cap of a company trading at like penny stock, right? And same with Amazon, 18.22% after hours. It's just how the market's responding to this, what's going on. It's just absolute insanity, which is why we've been talking about you need to be very careful, and we've been talking about buckling up. And during these times of extreme market volatility, as people try to rush in and out of positions and try to catch the right move, it's a dangerous game, right? So if we're taking a look at Amazon on the weekly time frame, they're basically trading at about 3,200. Okay, where does that bring us? That brings us pretty much right back into this middle-ish type of channel. Is it 3,200, or where was it? Where were they at? Let me go back. It was, about 3,200. So that brings us pretty much right back into this middle of this trading range here, just right around there. So there's still trap supply up in that area. We'll see, we'll see where they open up tomorrow and what takes place, but it's just bonkers, right? It's just bonkers. Let's quickly take a look at yields. What happened here today? Not much. Yields were up slightly. Still, look at these things continuing to compress, right? Expansion, contraction. The more these contract, it leads closer to a inversion in the yield curve. If you look at the 10 and 2, it didn't really go anywhere. It's at 0.63. But ever since the Fed talked, we saw a pretty steep sell-off right there in the yield curve. And if you look at the 35, this one did turn down a little bit. When these turn down, you don't really want to be in financial stocks while a curve is flattening out. But yet financials have been doing, decent overall. If you take a look at the 10-year yield, the TNX up 3.45%. And yeah, that obviously puts pressure on tech stocks when we see a rapid rate of change to the upside in the 10-year yield. But really, as of lately, it's just kind of right here. It's just in a channel. So it's just going sideways as it stands now. If we take a look at the TLT was, this is where it's crazy. This was down on the day. Everything was down on the day for the most part. So, where was the safety play? It seemed like it was just consumer staples. That was the only thing that was really up other than oil. But yeah, a gap down, and then we started to rally up a little bit higher. We'll see if that has any legs to follow through, but very similar to TNX, how it's just going sideways. still chopping back and forth between this range. I think we're going to see some fireworks if we start breaking out to the downside or to the upside. So yeah, we'll be on the lookout for that. Another interesting thing is there was actually a positive correlation between the dollar and the S&P 500 today. So, you know, somebody's lying here. We'll see who it is. And the reason why I'm saying somebody's lying is even gold was down on this big move down on the dollar. So overall, the dollar still consolidating, but it's still coming off. I was thinking that, hey, if the market comes off a little bit, we'd see a little bit of a bid in the dollar. So somebody's lying here. I don't know which one it is at this particular point in time. So maybe the dollar is going to continue to sink off, and maybe the market, you know, with Amazon, and or maybe it's just a bunch of like, we just need to wait this earnings season out here a little bit to get a little bit more clarification. A lot of things are just kind of jumbled up. But yeah, the dollar came down, and the S&P 500 came down alongside it. Gold was down, not a lot, but it was down slightly. And then oil actually no longer looks like a good short after today's candle, up 2.28%. I was looking at this wick, this wick, this wick, this wick, and that wick, and I was looking for it to get below. Now, let this be a good lesson, actually. So even though it looked like a potential kind of topping where this was looking like it was curling over, and this was a negative divergence that was forming, but clearly this day up knocked that out of the way. This is why it's important to be patient and wait for stuff for confirmation. So we never got that confirmation. We actually started cracking through the upper range of it, which is more bullish. Now, what would be funny is if this just came up and then all of a sudden it hit down, and then no one wants to take the trade at that point. But we'll see what happens with oil. But yeah, that was up on the day. Quickly look at Bitcoin. Bitcoin did catch a little bit of a bid, and now we're kind of, you know, slightly down 0.5% so far to start the new candle right here. But we did crack down to this bear flag, so we'll see how it responds with all these, you know, Amazon tech earnings. As soon as they reported earnings, right? Amazon reported earnings, everything started just ripping up higher and higher on the screens. If we take a look at Ethereum's kind of, you know, did the same thing. It started ripping up a little bit higher back in this flag, but now it's kind of just pedaling down a little bit there, okay? Now, this is where it gets interesting. Like, okay, so where was the safety play? Well, I'll talk about that momentarily. Let's look at the FANG ratios right now. So, you know, Facebook, Apple, NVIDIA, Google, Microsoft, Amazon, Netflix. And what I want to just point out is just, like, these have been getting destroyed, and we called out one of them, basically, that was strong, and that was Apple, right? Well, now, I mean, if you take a look at Google, obviously Google reported earnings and they fired back up. So Google is one of the stronger ones. Apple's one of the stronger ones. Facebook looks like hell. Microsoft, still not there yet. It's below that 50-period moving average. Amazon, that's going to change tomorrow, so we'll see what that does. And then Netflix still looks pretty bad too as well relative to the S&P 500. Now, this is where it gets a little interesting, right? So these ratios don't look good. This is more of like a risk-on type of trade, you know, heavy tech, growth names. If you look at this is more of a safety trade. And this is looking at, you know, gold, utilities, consumer staples, TLT, defensive names, and XLV. Right, so healthcare, and you can see all of these ones, despite a lot of them being down on the day, they performed better than the S&P 500. You can see the upticks right here, and we were talking about that when they were coming down. So we're basically saying the safety trade's not fully done yet, all right, at this particular point in time. Now, clearly, they are chopping pretty significantly back and forth, but they're bouncing, like gold is bouncing off that 50-day moving average. Utilities is bouncing up a little bit too, right? XLP is showing some strength. TLT, it looks like it could possibly cross over back over again, which is good. Defensive names caught a big bounce, and healthcare did too as well. So defensive names are still outperforming the S&P 500 at this particular point in time as these head higher. Come tomorrow, we might see a down move if Amazon, you know, lifts all those tech stocks up with it, right? If we get some really bullish price action there. So right now it's just, like I said, it's a light switch. It's on, off, on, off, on, off for risk. And when it's like that, when it's in volatile times, you need to do one of two things, right? One, you need to lower your position sizes and widen your stops, or just step away from trading, right? Day trading, these type of swings. If you're looking for longer term investments, like big moves down in some big growth names, and you're looking to hold it long term or even into the summer, you can put on some good risk trades You know, for example, like some of these tech stocks, maybe into this summer, we'll catch a rally on some of these beaten down names, or even to the end of the year. So potential some leaps. There's so many different ways you can approach it. The reason why I say, you know, potential leaps or something like that is, you know, your premiums built in. Let's take a look at the indices. So, yeah, we came outside of the options risk range, and where did we go back to? We came right back pretty much into the middle of the range, not too far off of it. Tomorrow, you know, we're looking at a little bit of a gap up as of right now, at least. When I look at the 15-minute time frame, we came into the 5-day moving average. All right, and we said that was an area to potentially start getting long, but we kind of just sold off into the close. It could be very well a bear trap, where traps bears in, and then we're going to be gapping up as of right now somewhere around this gray box. That could change, you know, come pre-market, but that's where we're kind of at right now at this particular point in time. So if we get some crazy rally tomorrow, look for this gap to potentially get filled. That'd be a very, very big move in a single day. That'd be very bullish. You can see right here, we are overextended to the downside. So that level has to get worked off. So if we're still kind of in this bearish type of territory, this gap up is going to bring this up. All right, and then it's, you know, look to see it cross above 50 potentially to get a little bit more steam to the upside, at least for the RSI, and this to cross over to be bullish and potentially start getting over that zero line to see if it can get a little bit more steam. If it doesn't really catch that steam, a gap up might potentially get some selling into to start the day. I don't like really just firing off trades very early in the day. I like to, you know, wait 15 to 30 minutes to see where price may go and if volatility kind of contracts a little bit and if anything sets up. If we do take a look at VIX, the volatility index, we have two gaps now beneath us. You know, we fired up to the upside on a percentage basis terms, up 10.23%. So yeah, the bullish case here is we come and fill these gaps. It doesn't mean that volatility and risk is off the table at this point, right? So we can still see volatility rise, but you know, it was a pretty strong move to the upside. This little kind of inverted hammer type candle might, start to look for potentially one of these to get filled into Friday's close, right? VIX Crush Friday. If we take a look at the BPSPX chart, bullish percent index, the bullish divergence still playing out, and we still have room to go to the upside, okay? I like to look at this as a signal chart for either overextended to the upside or the downside, and then I like to look for negative and positive divergences too as well. And we're just basically, this signal chart is telling me that there could still very well be room to the upside. If we take a look at the Qs came outside of their upper volatility range, and they came right back down today, down 4.05%, right back into the middle of the range. Tomorrow, they're going to be elevated because of Amazon if it continues to hold. Now, I talked about what is bullish about this. So first and foremost, this is important, right? We've been talking about look for a high volume break to the downside. This is where it gets interesting. First and foremost, we saw a big move to the downside, some distribution days, right? Volume came up, and then we started a rally on some declining volume. I said, look for a high volume break. That was a big break. One of the biggest that we've seen since the pandemic. That, to me, does not look like volume being, it doesn't look like a distribution day. Okay, that does not, to me, signal very high volume to the downside. So, that to me is a little bit bullish. And, you know, I'm not going to start jumping into orders right now just because of it. I do, you know, if I want to be bullish, I want something to still set up. And this, boom, boom, is not really setting up for me. For my trading style, it's not setting up. But what I want to call out here is that volume on a day like that, that's not that bearish. Not to me, at least. And the same thing goes with the SPY. Big volume break, down 2.35%. Sorry, a big percentage point break, down 2.35%. Volume, meh. Nope, not bearish. I wouldn't call that bearish. Can that change tomorrow? Could, right? Or next week? Could. But as of right now, on a big fearful day like that, that does not scare me. Let's continue on to the 15-minute time frame. The Qs got really just, they came into the 5-day moving average, and then they kind of just carried, and then they just sold off, carried, and sold off more. That to me seems pretty bearish, trappish, right? And as this gray box is right here is kind of where the market is looking up to open, at least as it stands right now. So, it's going to be working off those overextended levels. Look for very similar what I said about the SPY. We'll say the same thing here. Look for this to cross above. Look for this potential gap to get filled or price to come within this range, right? You're going to have resistance overhead right here at about 362. But if we can start to, if we come up to this area and we start to hold it like this, and then we start to break out of that, and this is coming back above 50, this is going up, I would say we can. I could say we can fill that gap. That'd be a huge move, in a single day. So, that would be a huge move in a single day. So but shoot, the volatility is here to support that, right? I don't personally think that we'll get that gap filled, but I do think that it's very possible that it's going to try. So we'll see, right? We'll see how it plays out. If you look at the BPNDX chart, I will say if we get that gap filled, this is going to be overextended to the upside, right? So this has already been moving up, our signal chart on the BP, right? I like to look for, like I said, overextension to the downside, overextension to the upside, positive and negative divergences. So if it comes up here, that would be quote unquote overextended, could stay overextended for a while. Then if that's the case, I like to look for those negative divergences, but at least allows us to be like, okay, maybe step off the gas a little bit. Let's see how it works out and then see if anything sets up. Quickly talk about the IWM. Hit the upper risk range, sold off as well. Not nearly as much as the other indices, down 1.89% right here. And take a look at this, it was a pretty decent size move to the downside. Volume, light volume, right? Not bearish. That wasn't bearish to me. So we'll see how tomorrow plays out here. If you take a look at the 15-minute time frame, came into the 5-day moving average. All right, it wasn't like crazy, right? It was just kind of, came up, sold off. It wasn't all too aggressive, right? So we have this little trend right here, a high, a lower high, and if you just connect them, kind of looks like it's wedging right here. And then tomorrow it's going to start off probably right around $200, 200 points, whatever you want to say. For the IWM, at least how it stands right now. That could change pre-market, but as it stands right now, that was kind of where it was at the time of this recording. So, yep, we broke that little trend, this little potential head and shoulders, and now we're looking at a gap up. Nothing certain. We still have resistance right here at around 204, and we have that support right beneath us at that 5-day moving average. So if the 5-day moving average starts to give way again, then just proceed with caution. But right now, it's starting to neutral to go to slope up, and that's a positive sign here for the short term. All right, everybody. So let's just wrap this up in the conclusion section. Right here, right now. Let's do it. Okay. First and foremost, I hope today's video kind of gave you some insight that even though that there was a lot of fear and a lot of movement to the downside, the volume didn't quite support the fear, meaning that it didn't seem, and I wouldn't quantify this as a distribution type day. Now, with after hours already taking place, Amazon looks like it's going to kind of help lift the tide. You're going to have other crazy stocks flying up like Snapchat. So we'll see. You got to give it some time early in the morning to see how this kind of plays out. But as it stands right now, even though it was a very bearish day, and what we still need to be very careful, it wasn't that bearish when you look behind the curtain. That's all I got for you on today's episode. Tomorrow I'll be bringing the weekly recap. See y'all later.